Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. I'm your host, Alex Thorn. Thank you for listening. We have a great show for you today. Senior ETF Analyst from Bloomberg Intelligence, Eric Balchunas, is our guest. We'll get into it with Eric about the apparent about-face the SEC seems to be making on the approval process for the Ethereum spot Ethereum ETPs. If you're listening the day this comes out, Thursday, May 23rd, we think that we will get 19B4 ETH ETF approvals today, which is the exchanges being approved to list the products. There will be more time to come before the products themselves go live, and we'll get into those specifics with Eric. Of course, we'll check in with our good friend Bimnet Abibi from Galaxy Trading, as always, about markets. It's a kind of a classic Alex and Bimnet rant about the state of the American fiscal and monetary situation. If you listen and like this show, I think you'll like that discussion. Before we get to any of that, I need to remind you to please refer to the link to the disclaimer in the podcast notes. Note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy Digital or any of its affiliates to buy or sell any securities. Wow, the winds are blowing. The times are changing. Crypto is on the national political scene. A lot has happened in the last few weeks. Former President Donald Trump said that if you like crypto, you should vote Trump. His campaign now raising money, saying that they're raising a crypto army, which is directly positioning the campaign against a pretty iconic and infamous Elizabeth Warren ad that said she was raising an anti-crypto army. And then the House voted on SAB 121 to overturn this arcane SEC accounting rule that was prohibiting banks from custodying crypto, with 21 Democrats voting in support, and then 12 Democratic caucusing members in the Senate, 11 Democrats and 1 independent, Sinema from Arizona, voted also to overturn. All of that despite an explicit veto threat from the White House. Now, that was last week, and the White House hasn't vetoed that bill yet. If they don't veto it in 10 days, it will become law. But also then on Monday, we have this apparent shift in position in the approval process for the Ethereum ETPs that had issuers and exchanges scrambling to get these edited 19B4s back into the SEC for what looks like immediate approval on those. So maybe we have Ethereum spot ETFs coming soon. You have to wonder about the timing of that shift. And then today, actually moments ago, as we record this on Wednesday, May 22nd, the U.S. House of Representatives voted to passed the FIT21 Act, which is the Financial Innovation and Technology for the 21st Century Act. This is comprehensive crypto market structure reform. This bill, which passed with 71 Democrats voting yes, would create a comprehensive regulatory structure for crypto in the U.S. It would draw clear lines between when the CFTC has jurisdiction and when the SEC has it. It would create rules about token issuers and developers, about how they have to disclose technology risks, ownership. Investors that own certain thresholds, 5% or so, would have to disclose their ownership in those tokens, and a variety of other generally great things, although it is a comprehensive bill. 71 Democrats voted for this, including former Speaker of the House Nancy Pelosi. That's more than triple the 21 who voted last week in the face of that White House veto threat. Interestingly, earlier this morning, the White House did not threaten explicitly to veto FIT21. And you have to wonder, because of the two bills, if you were intent and you were anti-crypto, of the two bills, FIT21 is significantly more consequential, in my opinion, than SAB 121. So if you only vetoed one, you would veto FIT21, I think. But very interesting. It signals, I think, a change in the White House's political strategy that they didn't threaten to veto FIT21. Anyway, it passed with a fairly large contingent of Democratic support. And you have to wonder now, we were somewhat bearish on the idea that the Senate might even take up this bill. There's really not a lot of time left in the legislative's calendar. I mean, they're going to go on vacation for the summer, and then by the time you get back, it's basically the campaign season. But with this level of Democratic support, I think the odds are significantly increased that the Senate will feel obligated to act. It's not clear if they'll take this up or if they'll take their own approach or merge something or do anything at all. But I would say this is the most bipartisan vote in crypto legislative history. SAB 121 last week was the first time Congress ever passed a crypto-specific bill, and this is a significant milestone, and there's a lot in this thing. It probably won't become law this year, but nonetheless, from a political standpoint, I think it's, again, fair to say that crypto is quite bipartisan, and it looks to be trending more so. I don't know, but it's a big part of it, and I actually think the Ethereum ETF story, it's possible that that's actually just a piece of this bigger story of the shifting political winds in crypto. Let's hop right into the show. Let's go now to our friend Bimnet Abibi from Galaxy Trading. Bimnet, welcome back to Galaxy Brains.
Thanks for having me. Love your sneakers.
Thank you. I took off the. You didn't like the Nike Dunks I was wearing. I don't want to even.
He's wearing Pandas.
Apparently, they're just kind of played out now. Not okay. Yeah. Well, look. I mean, the big news in our market this week is this apparent 180 shift in the ETH ETF approval process with the SEC. We don't have to go in depth on this because we also have Eric Balchunas coming up next on the show to talk about that specifically. But what else, either that or what else is on your mind in markets this week when you're watching the lines and numbers?
Yeah, ETH ETF definitely very notable, most notable thing in crypto. I think it represents a big shift in the sort of political and regulatory landscape for crypto. I think the ramifications will be felt, for years to come. As far as the actual product that the ETF is providing, I think there are some obvious deficiencies in terms of staking and fees and the ability to do stuff on chain and stuff. But I'm assuming Balchunas will go through that stuff.
I agree with that, by the way. Like we were talking about this earlier, like I feel like the delta in functionality between the spot and the ETF for Bitcoin is much narrower than the delta between the spot and ETF for ETH, in that you can't send or receive on chain your Bitcoin if it's in an ETF, and Correct. you lack self-custody, so you don't have the same level of censorship resistance. But if you're a hodler,
you're
mostly
doesn't really
just
matter.
hodling. Yeah.
If you're a hodler, the ETH ETF is not a great product for you.
Because you would stake, you might even restake.
Correct.
You certainly can't, and Ethereum is I think been successful because it has such a robust on-chain financial market.
Correct.
Which you can't access.
Correct.
So like there's many more features of Ethereum that you can't use if you do the ETF. But nonetheless, it's also highly convenient to hold an ETF. We talked about how it's
and you can get margin financing for it, and so there are some benefits. But fundamentally, for folks looking to buy and hold for the future, you're in a product that is not ideal. Yeah. Like the ideal form of owning ETH is you own ETH, you stake it, maybe you restake it, but and you self-custody it.
Yeah, I hear you. Still a sea change, though, and probably a similar class of investor that we've highlighted, primarily the advisors on the wealth platforms, the bank and broker-dealer platforms. They really can't put their clients into some stake product. I'm not aware of one for them. So still, I think, a big deal. But anyway, we'll have to see.
And then the Grayscale product also charges you a 2% management fee.
We're not sure what they're going to do with that, right? I mean, they were 2 at GBDC, and then they lowered it to 1.5%, which is still – what's 5 times higher than the average other competitor. So,
but there's $11 billion that is of ETH supply that is now available to be redeemed.
Well, will be
cash
at some point. I should say too, we get more into this with Balchunas, but we don't know exactly when these would go live yet. What we're talking about is the 19B4 process. Let's move on because we got a whole conversation with Eric after this about that. What else are you looking at? I mean, it doesn't feel like a huge macro week, really.
Yeah, I think what's notable in macro has been the strength in the commodity complex recently. Gold is hovering around, high 2300s, it broke through 2400, all-time high areas. Silver had a breakout through 30, multi-year highs, looking like it wants to trend higher. We've seen, things like platinum trade well. Today, nat gas was on a tear because of, some concerns in Europe around a shortage. And so, there's a lot of commodities that have become very topical and kind of uncorrelated to broader markets. And those things are very notable. And a lot of the change you're seeing in those markets is very structural in nature in terms of, foreign central banks and foreign, sovereign wealth funds and, really thinking through the de-dollarization, the focus on kind of hard assets, And so, you've seen, basically the Chinese buy a ton of gold, places like India buy silver.
Yeah.
And that's, again, to kind of get away from, the U.S. dollar in a way. And then ultimately, I think what matters for markets on the next 6 months is really the election. You've got two very different outcomes for markets based on who wins. We've talked about Trumponomics in 2 episodes ago.
It was a great conversation, by the way. You should go back and listen if you didn't hear that one.
But high level, Trump means tariffs, which is inflationary. It means folks getting deported like crazy, so labor shortages. Also probably means permanent tax cuts and increases in defense spending. So it's very inflationary, and also for the geopolitics, presents some more risks.
Yeah.
And so, that's kind of the inflationary backdrop. I think either president is probably going to be good for stocks. And then on the other side, you might have some tax increases. You might have, I would say both parties, whoever wins, is going to be bad for the fiscal situation.
I was going to say, it doesn't feel like Trump didn't cut when he was in office. He spent a lot. He probably can. They're both populist, really.
They're exactly.
Yeah.
And so, I would say, in the Biden administration as well, you're probably going to see a more honest reaction to inflation from Fed officials in terms of their willingness to potentially even hike rates or hold rates higher for longer versus, under Trump, he's going to appoint officials that are going to be more inclined to cut sooner rather than later, and Treasury policy that's a little bit more lenient. And so it's a tale of two presidents, and that, I think as you start to see the Trump odds increase or decrease, you'll see the market move one direction or the other. But those are really, the election is really the next big thing.
Yeah, it's a big deal for crypto, too. We're starting to find
Absolutely.
out. Like I was
Seems
talking
like
about,
crypto might win in either way.
It does. I think it almost can't have gotten worse than the prior couple years. So I think it probably does get better, even if the current administration stays. Here's the thing. You were talking about crypto, too. 2012, Obama's reelection to 2016.
Yes.
Was crypto higher or lower? Actually, in that one, I think it
was higher.
Well, it was it was higher. It actually did get high at the beginning and then was low. Well, let's try this one again. 2016, Trump starts his election. He gets elected. He comes out in 2020. Did Bitcoin end up higher or lower during that administration? A lot higher.
A lot higher, sure.
Okay,
Yeah.
2020, Biden comes in, and it's about to be 24. You think at the end of the start of 2020, was Bitcoin higher or lower in his administration?
It was higher.
Like tonight, a lot higher.
Yeah.
So
yeah.
Trump or anyone wins in November.
It's
4 years from now, 2028. What do you think? Bitcoin higher or lower?
Well, you sure, all right, higher, but like that, you can say that about any risk asset, basically.
That's true.
Is
that inflation?
It's the stock market. It's the inflation.
That's a good point.
It's insane
I was
money
gonna say
printing.
it's
deflation.
Yeah,
like,
that original
this is
Obama one is pretty bad because actually there was that big peak in 2012-13 where it hit like $1,300.
Yeah.
And then actually in 2015-16 it was down in like the $200 to $500 range. So actually that one was lower. But I'm just saying, I think we're higher no matter what.
Yeah.
I think we're probably, and part of that might also be fiscal too. I mean, like you said.
It's fiscal, but it's also just so many structural things that are happening all at once, right? You take the AI stuff, right, in terms of, you've got to re-engineer power grids to, take into account that the AI processing data centers are going to be super energy, right? It's the infrastructure stuff that has to get done. It's the onshoring, right? It's all of these things that are structural in nature that are going to get done over the next couple of years. And on top of that, you're talking about a government that spends, over 5% of GDP in deficit spending. And so when you throw in the fiscal impulse on top of the huge structural changes that the economy is about to go through, it's really hard to see how growth does not, remain elevated in the U.S. And that should be good for risk assets.
Yeah, it should.
The inflation shit is so bad.
Yeah.
It's
so sticky.
It's so sticky, and
when you actually walk around in your daily life, it's feels high.
Yeah, and really, what it is I just constantly feel like these central bankers are just misrepresenting and basically lying to everyday people.
It's like gaslighting.
It's so insane. It's
no, inflation's getting lower. It's pretty lower. It's up slightly over a couple of months, but it's still And it's like I was trying to order. I looked at a deli that I used to like to order from in New York, like not an expensive place. $18.95 for a chicken quesadilla. 18. Granted, this is Lower Manhattan, but I'm just saying, like,
Some guy,
dude, it's a tortilla with cheese and some chicken.
yeah,
Like,
I'll
$20.
I was in a chat with somebody's the other day. This guy ordered like a burrito and nachos in Chicago for pickup on an app. It was $36.
Like, it's insane.
Like,
Yeah, exactly. And you
but
see
it's not about that. It's about the genuine, honest conversation that people need to have out loud.
Yeah.
Right? It's not like Powell can't go up on TV and be like, I can't control for fiscal. Like, somebody needs to go on TV and tell me this shit is bad.
Yeah.
Do the math for the next 10 years. Somebody needs to tell
Just
the
show me that
American
chart.
people
Yeah.
that this is what our liabilities look like on a go-forward basis.
Yeah.
Right? We have to keep the dollar as
It does feel like that,
this-
like in a more classic, iconic American age, somebody like a Powell would stand up and tell the truth because it matters for the country. Don't give me this like, the politics and bureaucracy of the Fed versus the Treasury. I'm not supposed to like get too. No, dude, the country could. Who cares
Country
about that
needs you.
divide
Yeah.
if the country collapses because you guys screw
Absolutely.
this whole thing up?
And, like-
please, somebody stand up and be an adult about it.
But also the issue is it's just like if there was a 30-year-old that was the Fed chairman, right? Like, we would be enacting different policies.
And very
if
afraid.
Congress was like 35-year-olds, right?
Yeah.
Like, it's just so different. We're so nearsighted, and the long-term impacts are insane.
Yeah.
Think about running 5 to 6% deficits ad infinitum. What portion of the budget is going to be paying interest in 15 years?
What, all of
Like,
it? 50?
how are people not freaking out about this and like ringing the
Yeah,
bell
you
and
won't
being
have money
like,
for anything,
like-
Republican or Democratic
right?
stuff
and
that you
it's
want.
like, and I'm like, come on, people. Like,
It
let's
is math.
You need to cut spending and raise taxes like immediately.
Everyone knows this. This is the
and
pure
it's
math.
like, but you can't do it because it's an election cycle. It's so messed
and it's
up.
always an election cycle.
Like, whoa. I mean, well, that's a structural issue. You're
Yeah.
telling me Congress guy has got to get elected every 2 years, senators every 6.
Yeah.
Like, he's running to like raise money 3 months into the job. He's like,
Yeah.
oh, I'm on the phone fundraising
Yeah.
instead of being like, how do I fix this
America.
stuff for my constituents?
Yeah.
But it's absolutely asinine.
Yeah. I don't know. Well, hey, look, we're building an alternative that you could maybe opt out with. At least Bitcoin is that story.
But it's, I
It's
mean,
something.
I love it, but it's like,
But the
you know, it doesn't solve the main issue. Not everybody has Bitcoin.
No.
Right? And like, yes, that's a great way for people that already have money to store their wealth because it will, but for the folks that don't, right? Like it putting them in worse and worse situations.
100%. And separately, like Bitcoin or not, we have a country that we care about
Yes.
and love. And the math is pretty straightforward. And they won't tell us this. They
Yeah.
keep us focused on like the next month, the next FOMC meeting, the next earnings call. Like, it's no, dude. Like, someone's got to take a long view on this thing.
Somebody's got to think. But my part of the issue, though, is like, I don't know how many of these politicians in Congress genuinely understand the issue.
I don't think they do.
And like that.
I saw a guy stand up now during the Fit 21 debate. The guy has no idea what he's talking about. He's clearly been given this. He was proposing an amendment. I don't think he's ever spoken before in Congress. They're
Right.
probably like,
Did
here you go,
see
young
that
women.
Biden administration economic official the other day?
No, which one?
Being asked about, how does money work?
Oh
and
my
the
God! You're
printing
talking,
money
about
thing?
you're talking about the one in the documentary,
Yes.
Stephanie Kelton's documentary.
I mean,
yes.
that guy. You got guys that went on the House floor being like, "Global warming doesn't exist because I got snow in my hands." like it is absolutely asinine.
Oh man. Well, you're not asinine, my friend. Thanks for coming on Galaxy Brains. We'll check in with you next week. Maybe there'll be more. We'll have some more numbers or data or something to talk about. My friend Bimnetta BB from Galaxy Trading. Thank you so much.
Thanks for having me.
Let's go now to our guest, Eric Balchunas, senior ETF analyst at Bloomberg Intelligence. Eric, thanks for coming back to Galaxy Brains.
Yeah, great to be here.
We have another ETF whirlwind happening. The last time you were on the show in January was the day before the Bitcoin ETFs launched. I think it was January 10th. This one has felt a lot different. You guys had, you and James Seyfarth, and had the odds pegged at very low, 25% likelihood that this week 19B4 is for an Ethereum spot ETF would be approved. But that all changed on Monday. I guess why did it change? Or, set us up. Why were you down on it? And then why is the tide shifted?
Yeah, I mean, we were down on it because everybody in the process was down on it. They had heard nothing. And when you have something like a 19B4 for something that's asking for exemption for something, typically there's a lot of communication between the SEC and the issuer. We saw that with spot Bitcoin ETFs. There was 90 days of back and forths, right? There was all these meetings. Remember, BlackRock had 5 or 6 meetings with them. Other issuers had 4 or 3. All of this was just like building and building and building, and every bit of news was incremental. So because we heard none of that, it reminded me of when the spot Bitcoin ETFs got denied in cycles past. It was radio silence, delay, radio silence, delay, radio silence, denial. Mm-hmm. And this is the same exact thing, right? So we can only go on the intel and the patterns, and it all pointed to no. So we kept it 25%, which was pretty bleak. And then, boom, on Monday, there's chatter building that the SEC has reached out, namely to the exchanges, to like get the 12B1s in shape, and that as you start to talk to people, and again, when you connect this to the outer world and you see what's happening, there was clearly a shift, a pendulum shift politically. Moderates like Mark Cuban were telling the Democrats, you can't let this issue slip away. There was the SAB vote and many other things that were all part of the same story, which was that the Dems did not want to be seen as anti-crypto. So my guess is they did the calculus and they thought, if we deny this, the rejection will be picked apart. There'll be like lawsuits potentially, which all of this just continues to feed into this anti-crypto narrative. So if your goal is to not be anti-crypto, it was smart of them to do a 180. Mm-hmm. So I get it. But for us, we're like, oh my God, this was like, holy shit, for everybody involved. Mm-hmm. So we changed our odds to 75% just like that. And unlike Bitcoin, where all of the information we got and shared was incremental and all moving towards approval in one like sort of straight upward line, this was just like, we were coming down in a straightward line, and then we went straight up. So the whole thing was, both have been roller coaster rides. This was a different type of roller coaster. And it all kind of, exploded on one day, which was Monday. And then now everything's been in a scramble. People probably haven't slept much, at least if you're a lawyer working on this. And it looks like we'll see approval tomorrow, which is Thursday. And it looks like from there, we'll go into the S1s, which is a different part of the approval. How long that takes, I don't know. But I'd reckon, if I have an over-under, I could say the launch date's in 2 weeks, 3 weeks, something like that.
Wow.
But
interesting.
James thinks it could be months. I don't think so, but and it could be days.
Yeah, I was thinking that it could be weeks to months. I was saying maybe July. But yeah, I mean, it doesn't have to be. I mean, we really just don't know. And so had you heard that, because these are two different processes. The 19B4s are the exchanges asking for permission to list, and those are the ones that come with these deadlines. And I think Van Eck and ARK have their final approved denied deadlines Thursday and Friday of this week. And with the Bitcoin ETFs, it was ARK that had their the earliest final approval denial date was, I think, January 11th, if I recall, and or maybe January 10th. And so the SEC and the issuers had worked on simultaneously the 19B4s and the S1s so that they could launch them all, or approve the 19B4s and let the S1s go effective at the same time.
Correct.
It doesn't look like that's going to happen, though, right? There's got to be some distance between if they do come in and approve all the 19B4s this week, they're not. Are you hearing whether any of the issuers are actually ready to actually launch this week? Not this week.
I don't think so, because the corporate finance team that does the S1s, I think, was just told of this on Monday or over the weekend. So they were caught flat-footed. They don't really have any. But the good news is, unlike Bitcoin, that process created the template. So the prospectuses and the documents are probably in need of only fine-tuning, not coarse tuning. So it shouldn't be that hard to fix up a couple things. Mm-hmm. And so that's a big variable here, is that it shouldn't take that long. It's less work. So I don't know, I would see it all happening fairly quickly. But I remember in the Bitcoin day, they give comments and the files came back. It felt like about 2 weeks that played out.
Yeah.
Then there were another comments, another 2 weeks. So it's like 2 weeks per comment. So that's why I said 2 to 3 weeks, because I can't imagine you need more than one comment period, because this is all based on the Bitcoin prospectuses largely that were already approved. So
I think the argument for longer, I agree with you. I think especially with the actual process, like things like cash, create, redeem, how's that going to work? Like the actual sort of real meat ETF stuff, that they have figured that out. But here's what I would suggest as a reason why it could take a couple rounds or more than one is things like proof of stake. It's just a lot different, right? So they can't just think about all the disclosures in the Bitcoin ones about, I mean, there's so many, right? It's like fork risk and illicit usage of Bitcoin risk and mining risk and whatever else, all these disclosures, pages and pages and pages, right? A lot of those transpose to ETH, but some notably very much do not, specifically the differences between proof of work and proof of stake. I'm not saying they're insurmountable. I'm just saying they're different. And then also, like, if you think about the regulatory attack area or attack surface on Ethereum's ecosystem, they have things like DeFi and right, which is widely sort of under regulatory scrutiny that I think will require a whole host of additional disclosures. Hacks, most of the hacks that happen on chain have all been sort of Ethereum related bridges. So I think there's more different disclosures, and so maybe it's 2 or 3 rounds, but again, they're not really, it's really just disclosing. It's not material to the function of the thing. So it is, I think a lot was, you're right, like sort of patterned out the last time. That would be my case for like a month or a month and a half instead of 2 weeks.
yeah, and remember there are ETH futures ETFs, so some of that's probably in those documents.
That's true.
And I feel there could be some level of exhaustion from the corporate fund. They may not want to go crazy here.
Just like,
there
look,
could be some cynicism,
well,
almost like, you know what, I'm so over this. We just did this. You're going to hand this to me before Memorial Day weekend in my summer. Thank you very much. So I could see a little bit like I'm over it. And they obviously, there's spot ETH ETFs in Hong Kong and in Canada, you know. So all the things you said, I agree. They're probably going to have to get that out there, but it's not like it's a completely uncharted territory. There's been some products in a variety of forms that have done this. So, you know, I don't really see, anyway, but we'll see. There also could be some idea just to get it out, to get the story out of the news, you know, just get it out of the cycle. Or it could even look like a win, like, hey, let's get these things up and launched so that we get this pro crypto win in our check mark to offset the anti crypto stuff. So the politics of it is a huge variable, and it does seem to have a huge effect. And we don't totally know if the politics are going to tell it to do it faster or slower. I don't have a read on that yet. But all I do know for a fact is that the staff was not totally ready at all for this, the S1 staff anyway. And so that means that it probably will be some degree of time after Thursday.
Yeah. So not this week likely. And you're right. I remember this. We were redlining. I think I even said in the wrap intro on this podcast when you were on last time, I'm thumbing through the filings like my name was Balchunas, because it was a great time. I used to, every time Fidelity or Invesco or BlackRock updated their S1, I would run like a red line to like see what they changed, right? And like, and then I would try to read the tea leaves of like, okay, did they add something? Like, how serious is what they added? Does that give me insight into whether the SEC is like less or more likely? It feels like some of that has to happen, but I agree with you too. I think it is plausible that it's one round here, or it's a 1.5 rounds, right? So it's like one clear amendment with like a bunch of stuff. But as far as I haven't seen any reporting that the corporation finance group has actually even sent back amendments yet or edits yet on the S1. So we have to wait for that first, I think, probably.
Yeah. Totally. I mean, I heard that the only 19B4 requests they really made were no staking and no airdrops. It wasn't that extensive. And, you know, again, they're run by ultimately the same people at the top. So maybe it won't be bad. I feel as though the other interesting part here is the issuers. Like, they had months to line up friends and family and, you know, sort of get some assets lined up in less time this time. So maybe the issuers maybe even would prefer a little extra time to get their act together, not just because, you know, the ecosystem and the logistics, but trying to get some flows lined up, because flows is marketing. They're all trying to jockey, especially if they get launched in the same day. So anyway, I almost feel like right now we're kind of back where we were. Like, when we had the Bitcoin approval, and when it was literally approved, it was like I said, I tweeted out that picture from 1944 headline, "War is over."
Mm-hmm.
You know, after World War II ended, that was the line. It was like half the page was the headline, because it was that, it felt that like,
Mm-hmm.
that's how this felt. This was like so weird. It was like a shock. And so the good news is already out. Like they're gonna approve. This stuff is all technical, whether it launches in, late this next month or, in July. The big part of this, the 180 is the real, like 90% of this thing and the news.
Yeah, I think that's right.
The rest is just logistics and legalese and
I mean, I think if they want
thing.
it, they could. I mean, you could be cynical, and if it is political, you could say like, okay, let's avoid the denial headline by doing the 19B4s, but we could drag our feet on the S1s. But it just, that doesn't really happen, right? You don't really get. I mean, I remember back with the Bitcoin ones, I was telling our team, based on talking to people like you and others and ETF people and, people at our partners, that like, if the 19B4s are approved, like we can assume the vehicles will eventually launch. They would never approve them and then not allow.
Yeah, I don't buy it. I don't buy that. James in particular likes to leave a little wiggle room. But to his credit, he kept us at 25%. I was going to go lower.
I would have been lower too, in his defense, in your defense, I guess.
Yeah. But he's like,
credit.
you never know. And so I do agree. You got to leave a little wiggle room for the unforeseeable things. But I can't imagine them approving 19B4 and then another issue.
No.
What I heard is the corporate finance team was told, okay, go get them in shape now. And so they already been told to do the approval process. Yeah.
Right. If they know they're going to deny, they don't bother. No one bothers to work on it. They don't want to work on it. They don't ask the issuers to stay up late working on it. Right.
Yeah.
I mean, in the end, they have relationships with the Invesco, Fidelity, BlackRocks, even the Bitwises, right? Even the ARCs. Like the SEC does have to work with these folks. They don't want to be jerks and say, do a bunch of work.
They may work
at
one of these companies down the road.
Right. That's true. All right. Let me ask you about, I don't know if you've thought it, we've just started really thinking again, we really at Galaxy and at Galaxy Research, we also agreed with this. Like we had, it's radio silence. So we put out reports leading into the Bitcoin ETF launch last year, estimating how many flows there might be, what the impact might be on Bitcoin price. And those basically, we were actually pretty spot on. We said 14 billion in year one, leading to $75,000 Bitcoin. We were right about the numbers, but we said that all of that would have to come from like the Morgan Stanleys and the Edward Joneses or whatever, the RIA platforms, the bank and broker dealer platforms. And really all of it mostly came from retail for the most part, or at least the retail brokerage platforms, because those banks haven't really turned on yet. Do you have any thoughts on either just in general, the likelihood of success, or comparing what we might expect versus the crazy flows we saw in Bitcoin ETF so far? Or have you started talking to people about their excitement for these actual products?
Yeah, I would get ready for the feeling of a little bit of a dud. Not completely, but the problem with the Bitcoin launch is it was the biggest of all time, by far. And it's sort of like any golfer now that wins is interesting, but after watching Tiger Woods for 15 years, it all just feels so meh.
Yeah. Especially when he came back and won the Masters again, a couple years ago.
I would throw that in his whole legacy, but especially when he started out, it was like, holy shit, this guy's beating everybody by 12 strokes. It was spectacular. Mm-hmm. And then, just golf has had a hard time kind of coming back from that electricity and like matching it. And this is Ether's, like I said, and Ether people hate this. This is like being an opening band having to follow the headliner. Mm-hmm. It's really hard.
Yeah.
And so I would just lower the bar big time. And A, there's been less time to prepare friends and family assets. B, I just don't think normal people, 60-40ers, need much more than Bitcoin. I think, let's look at gold and silver. Gold has, 80, 90% of all the precious metal assets. I just see them having a similar relationship. And the ETH futures were a real dud. I mean, they saw almost no action. They've gotten a little bit of flow since, but I don't think any of them are really over like maybe 100 million tops.
Yeah.
And that's 100 million after a year or two on the market isn't bad, as you know. So the Bitcoin ETFs have set a standard that is impossible to live up to. So I would just...
Yeah, I bet with like 18 billion or something.
Yeah.
It's insane.
Yeah, I mean, it's knocking on the door. How about this? This stat is freaking insane. If you look at ETFs and the speed at which they got to 10 billion, the record before IBIT was 647 days. IBIT did it in 49 days.
That's insane. That's just crazy.
Isn't that insane?
That's truly wild. Like,
that's 3 years to like a couple months.
Yeah, and we looked, we looked, and it was I don't have it right in front of me, but I was looking through the 13Fs and calculating quite simply like the percentage of shares owned that reported 13Fs versus the outstanding shares. So like which one to get right, because those are investment managers with 100 million or more in total AUM have to file those filings to say what they own. And it's I bet in FBTC, I mean, and all of them really were like, at most like 20% of shares had to report, which means the vast majority of ownership is like non-reporting entities, which is mostly like retail or Fidelity brokerage services on behalf of a bunch of people, right? This was pretty organic, is what I mean.
I agree, and that's good if you're bullish here, because you weren't even counting on that totally.
We weren't. We actually discounted. Our entire estimate when we reported on
I wasn't either. I'll be honest.
We basically said, look, the Erics and Alexes, we can just buy on Coinbase or Cash Out. Like, we don't need it.
I was trying to tell people that it's like fishing in a lake. The 2021 October, when Bitcoin was like at that fever pitch when BITO launched, it was like minnows were just chomping at it. And I had said the minnows are gone, but the bigger fish are what these are going for, which is the advisors and the institutions. The minnows were still there. I kind of misread that. So that's good, because at 20% ownership in 13Fs, and some are even a little less than that, but
they were.
Ultimately they'll probably get to 40. So you're looking at those bigger areas. Probably BITO is 44%. I would see the other ones getting there. So that's a good sign. And some of the liquidity, I mean, even if there's 10 of them, all of them are pretty liquid. Even like Wisdom Tree might be the smallest one, but it still trades more than way above average for a new launch.
It's crazy. So even the smallest one is, because there are a lot of ETFs out there, and you can have specialty ETFs, right? They don't all have to be gangbusters to be successful. I looked actually. If you look at the launches, I think it was the last 12 months. The Wisdom Tree is still in the top 15%. It's amazing.
Of new launches over the past. There was like 500 new launches. I think it's, even with it being last, it's still in top 15% of ETFs. That's how hard, and I always have compassion for new issuers, especially indies, because it is so hard. Yeah. That's why every now and then some crypto person, like they'll look at the daily flows and they'll bitch about like, oh, IBIT took in 0. What the hell's going on?
I saw
this
that.
Is a failure. I'm like, oh my God, you got to take a walk. You got to get outside. Like that's why I'm saying, like, you don't understand how hard ETF flows are and how hard this business is. They've been really spoiled. And so I try to help manage those expectations for them, just as a courtesy, even though, but because it is something that you have to kind of readjust what your reference points are. And for Ether, I would say anything over a couple billion in the first year is wildly successful.
Yeah. I think the biggest, private vehicle is the Grayscale ETH, which is attempting to convert here. And I think, I haven't checked in a little while, but it's maybe 9 billion under management there. So whereas GBDC was like 30 plus, right? And so, and again, it's 9 billion at like these prices, and that was GBDC at like those prices. So like, it's an order of, it's not an order of magnitude, but it's almost, it's quite larger, the Bitcoin investment. The other thing that I think is an interesting thing to note as to why really they shouldn't be as big, is that Ethereum is an on-chain application platform, right? You're not necessarily missing out on as much functionality when you buy Bitcoin exposure through an ETF as you are when you buy ETH exposure through an ETF.
Not to mention the lack of staking.
That's what I mean. And I ran that analysis yesterday. If you had bought $10,000, those on all the fund charts, like mutual fund websites.
Sure, growth to 10,000.
Yeah. I said if you bought $10,000 of ETH on the day of the merge in September 2022, when it went to proof of stake, and you didn't stake, you just bought it, you underperformed to yesterday by 8% than if you had bought and staked. And, you know, eight's not, I actually thought it would be higher, the amount of underperformance, but you know, that grows every year, right? So like that's a material, I think to
I
me
mean,
that's
if you consider
material,
that to be a fee, that's a
right?
huge expense
Huge
ratio.
fee.
This is the problem with BITO. BITO, I believe, last time I checked, had the roll costs in the futures were costing you, I want to say 4 to 8% a year, somewhere in that ballpark. Not terrible. I mean, you're up. It's like you're up 50 instead of 60.
Yeah,
Or
people
something
say
like
that to me. Why should I care about 8% over 18 months if the asset doubles? And I'm like, well, I mean, a fiduciary does care though.
Yeah, I agree. I think also just people just want the real thing. They want to have as close to frictionless exposure to that thing as possible. This is why ETFs are so popular. They do the best job at just getting rid of all the shit in the middle, and people love that. And in this case, you're right. There's this like footnote now that you got to have with this one, which only adds to my opening band metaphor, which they don't like. I once referred to them as small potatoes, and I apologize for that.
I saw
think it
you
was a
took
little
that back,
too.
but
Yeah, that's too dismissive. You know, ETH was the ETH people. I live in Philly, and I say that we're the Jan Brady of northeastern cities. You know, we're stuck in the middle of New York and DC, which are like power centers, and that's why our sports fans are so pissed off all the time and so wildly, creatively, mentally insane. And I feel like ETH is that. It's like the Jan Brady, and it's like always Marsha, Marsha, Marsha. The Bitcoin gets all the attention. So if I don't include ETH in a tweet that's supposed to be, if I just put Bitcoin, they're like, oh, look at him. He won't even include us. I just feel like they have this middle child syndrome, and so they get pissed off pretty easily, more than the Bitcoin people. But I kind of understand. I'm Gen X. Like we're left out of a lot of stuff too. It's like boomers and millennials. Like we didn't even exist. So being a Philly Gen Xer, I can relate to the ETH angst, and I appreciate it. And so I wanted to, I think I upset them. I upset them with this take, but on the flip side, I upset them when our odds were low. So some of them have come out real nasty towards me and the odds. I don't care. I don't feel much, but I understand what they're saying. I would feel more and be more embarrassed if our rationale for being low had something to do with bias, but we were not biased. We simply were trying to get it right. Our reputation's on the line. That's how we saw it. So our goal always is to be right. It's not like we're playing favorites at all.
yeah, I saw that you were being accused by some Ethereum community people. Not, I mean, you know, like on Twitter, not like it wasn't like, you know, Vitalik didn't
Yeah.
say
It's
anything or
just
whatever.
online.
Yeah, it's just online, and they were accusing you guys of being like Bitcoin maximalists because they thought that your lack of. But I also want to state for the record that every single person I know at any of these issuers, and I do know I work at a partner of one now. I used to work at Fidelity for 12 years. They're one. I have friends across this industry. Nobody saw this coming. No one.
Nobody.
In fact, I did a webinar with my team in January just about trends in crypto that was open to the public. And I was I had the over on my whole team of 7 researchers. I said 50-50, basically like, I don't know. This is in January. And then come like sort of March when you guys started lowering your odds. And then the SEC also was reported to be investigating the Ethereum Foundation. And now they've sent a Wells notice to Consensus and Uniswap. All this stuff is Ethereum related. I wrote in a research report that like this just looks like they're definitely not going to approve ETH ETFs at a minimum. And by the way, other stuff. So I just want to state equivocally that everyone I know that is smart on this industry was totally in the same camp as you and James.
There's one detail in all that is really interesting and important. There was a letter sent by 4 Congress people, maybe the senators, I can't remember. They sent it to Gary.
Yeah.
This was like 2 months after the Bitcoin launch, when this is right around the time the second wave was hitting, and like they were doing like 800 to $1 billion a day in net flows. People were like, holy shit.
Yeah.
And I feel like the Democratic side at the time, remember, they were still anti. This was before it became election issue. Mm-hmm. And they sent a letter saying, Gary, what the hell did you do this for? Don't do this again. And they included in there the fact that ETH futures were less correlated to spot than Bitcoin was. And I'm like, there's no way these Congress people from these random states are that acutely aware of correlation studies. So we thought they were actually working with the SEC to write a letter to itself that's a little tinfoil hattish. But the point is, I think everybody on the Democratic side got buyer's remorse
Mm-hmm.
because they were successful. If the Bitcoin ETFs flopped, nobody cares, who cares? But when they saw them succeed, I think they thought, oh my God, did we just let the genie out of the bottle here? We hate this, it's going to spread. And I think they got really nervous.
Mm-hmm.
And that to me was huge because I thought they're definitely going to close the barn door now. Nothing else is getting out. That is also fed into my thesis that has some intel that this was political.
Yeah.
Because it was political the other way, to be honest with you, for up until 2 weeks ago.
Right. Yeah, it felt like you're right. I think it's pretty straightforward to assume that politics are involved because a market regulator would not normally act like this. Is not, if you're just going to go about your business, you don't say nothing for months and then call everyone and say stay up all night. Like that's not the normal course of business thing. The abruptness doesn't make sense otherwise. And that's pretty
Correct.
straightforward, right? I mean, this isn't, I mean, I guess for the record, you watch the SEC and issues with like launching new funds. It doesn't normally happen this way, right?
Well, yeah, Nate Geraci, who's a great friend of mine, he is kind of trying to hang on to this thesis that they just didn't want a circus and that they purposely, but this would have to require Gary to telling nobody inside his own organization until the 11th hour.
Oh, so rather than create the like constant drumbeat like we had all fall. Yeah.
And frankly, a lot of people start to take off on Thursday. This is a big holiday summer kickoff weekend. He's going to send them into this weekend like all like drained of sleep and stuff. It's really sadistic.
Yeah,
and
it doesn't seem right, but it's possible. Again, we don't really know. It's
possible. Yeah, but we've been fed numerous pieces of intel and stories that this is purely something that was a 180 for political reasons. But again, I will call it all circumstantial evidence. It's very strong. But it's not like I have like hard.
Yeah, we don't
evidence.
have the documents or anything.
No, I don't have it.
But I think before we started recording, you mentioned that you think it's even possible that like the corporation finance or maybe trading in markets already had denials written for this. Like they had been, which would make sense if you plan to deny, because why they're not going to wait until the 11th hour. You know, it's like, why would you procrastinate?
Yeah, we will not be surprised if we hear that they had already written up at least portion of the rejection letter, if not all of it. And there was a meeting that was interesting. There was no meetings with like the issuers, except for one like 3 months ago where Grayscale and Coinbase met with the SEC. And we had heard that was to ask Coinbase about their correlation study. That would definitely, because the Coinbase correlation study showed that they were as correlated basically. And if the SEC was going to rate a denial and include correlation, which is crucial because otherwise they could be open for lawsuits, that would be something where they'd want to know, why were you so tight? Because maybe they were running a study that had it more far, and they had to be able to defend that. And that.
So you're saying that's the only meeting they really took was something that was research to embolden perhaps their rejection, basically.
Yes.
Yeah.
That's it. So again, Charles Gasparino just reported this morning. Yep. He basically reiterated what we said 2 days ago. I will say he calls it all breaking, but I mean, come on, throw us a bone here. We were way ahead on this, but he says breaking, and it's all stuff except what was a nugget in there, which was that that Gary was about to. Part of this was he was going to declare it a security, like that was baked into the rejection. And again, this is his reporting, but that would be in tune with how he feels, I think.
Yeah, I think I think the SEC has really made this pretty clear, but I was arguing that they have actually left a little bit of wiggle room on that question. So the criticism from, say, Pat McHenry on the House Financial Services Committee and others has been that Chair Gensler has refused to say whether or not they believe Ethereum is a security. And then more recently in this Consensus lawsuit. So Consensus, I think, announced they've received a Wells notice from the SEC. I think it's related to MetaMask, their MetaMask wallet, they said. And in response have proactively sued the SEC in Texas federal court. And in that suit, they say that the SEC has already determined that it is a security, right? So like that's the closest I think we actually have on the record. But of course, there's all these other things. They don't like staking. They're saying Coinbase's staking is a security. They're all sort of, they have this Ethereum Foundation. Like we all kind of know that that's where they were headed. But I feel like they
it,
still have a little wiggle room now to say, okay, ETH isn't a security, but maybe staked ETH is, right? So we can
yeah,
let
that
the
would be
spot
a
ETF.
threading the needle kind of situation,
Yeah.
which they might do. I'm curious, like, do you think it's a security? And do ETH people, does it even matter to them if it weren't for the ETF?
I don't think it is a security. I think it could. I really actually believe in the Bill Hinman like analysis that like, sure, when it launched, was it a security? But if you look, for example, I mean, one of the big things they always talk about is decentralization, right? What is, without going through all of Howey and the Howey test and or the Reeves test, these various like legal precedents to determine that answer, Eric, I would say it's pretty widely decentralized. I don't believe it's as decentralized as Bitcoin in its development or its ownership, or I think proof of stake is inherently more centralizing than mining. But I don't literally think that there is a group of a cabal that is driving the ETH price up on benefit for the benefit of shareholders. And I don't think anybody buying it thinks that's the case. So like in general, I don't believe it is one. But it is, I do think that it is meaningfully different than Bitcoin. Like truly, I think the proof of work mining versus proof of stake consensus is significantly different. If you think about it, computation powers the chain in proof of work, which is egalitarian. You don't have to be there waiting to be called upon. You can literally show up to the network with a solution to a problem and then never be seen again, right? Like it's pure in and out with there is no association. One miner has no knowledge of or association with any other miner. And proof of stake validating, you have to sit there with your capital at risk, wait, and be called upon by a group. Now, the group is a decentralized protocol. It's not like a centralized actor. To me, that's a big difference. And then also think about it in proof of stake, where if computation powers consensus in Bitcoin and proof of work, then capital powers consensus in proof of stake. So it's inherently more So I think they're different, but I don't think it should be a security under the U.S. securities laws. There
Okay.
are others that should be, but or even maybe, I mean, I don't know. This is what we have this big vote. This is probably coming out Thursday, but when we're recording on Wednesday, May 22nd, there's a big vote about to happen in the House on this new Fit 21 Act, which very clearly delineates when the SEC would regulate cryptos as securities versus when the CFTC would regulate cryptos as commodities. And it does shift the balance much more to the CFTC as commodities than the current SEC believes is the case. So honestly, the question is up in the air, and I think it is reasonable for crypto firms to not know. I mean, because they are, I think they really are different. They're not equities, almost any of them. Almost none of them look like stocks or equities to me.
Well, is there any other coin that you would say has mostly the commodity features?
Here's some that I'm safe to say that I think we are very certain. Any fork of Bitcoin that had a fair launch, here are the things I would say. Fair launch, meaning no pre-mined tokens, no sale to anyone. That's what Bitcoin had, right? So there's no insider money, right? And there are a few, a fun one, Dogecoin, fork of Bitcoin, totally fair launch, no promises, no centralized foundation, right? I mean, it's actually, Doge is probably, I would say, closer to likelihood of getting an ETF one day than almost any other. Which is just funny because it is funny. Because it is funny. I mean, so I don't know. There's more to, but you can obviously launch coins with features that look like the very permissible non-security like features that Bitcoin has. That is possible. And I just, I don't have a whole bunch in front. We think there's plenty that don't meet the Howey threshold to be securities, but including Ether, by the way. But anyway, were you ready for this? I saw James calling this the ETHness stakes. It's like the Cointucky Derby was the last one.
Yeah, I mean, it's perfect actually. And I didn't realize the double meaning there. Obviously, stakes. The Preakness stakes is, for everybody listening who's not into horse riding, it's a second crown in the Triple Crown.
It's brilliant, the fact that you have the Kentucky Derby is the biggest, and then the Preakness is the second. Yeah.
So maybe there'll be what's the other one called? The Belmont?
Is it Saratoga? No, Belmont.
No, Belmont isn't Belmont the third one?
Probably.
We'll figure that out. Yeah,
we will.
Maybe to be the Dogemont.
The Dogemont. So you're ready for it? It sounds like James thinks a couple months at most, or more likely, you think possibly a couple weeks. So you're gearing up for round 2 here.
Yeah. Somebody soon is going to have intel and a sign from corporate finance that's going to answer this question for us. So I would just stay tuned for the next day or two. We're probably going to have our answer soon.
Yeah.
And then, or at least we'll have like I said, we'll be close. But right now, it is really truly a guessing game on the S1s.
It is. Well, my friend Eric Balchunas, senior ETF analyst at Bloomberg Intelligence, thank you again, and good luck. Get some rest. It's going to be an exciting one.
Yeah, you too. All right, great to see you again. Bye-bye.
All right, later, Eric. That's it for this week's episode of Galaxy Brains. Thanks to our guest, Eric Balchunas, senior ETF analyst at Bloomberg Intelligence, and our friend, Bonetta Beebe from Galaxy Trading. As always, everybody have a safe and happy weekend. We'll catch you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.